Morning, Craig. How you going?
Very good, thank you, Anne. You?
Good. Yeah, good. Thank you. I thought we'd have because we both work in around the strata business of managing buildings and stuff like that. I'd like to talk mainly around about the capital works funds that committees or facility managers need to work with, and how you address that and how we look at it from a committee side of view.
Yeah, right. I think the biggest thing for us is, and I guess what we do is technical. So we come into a property and have a look through it, tell you what you've got, uh, essentially condition rate everything, and then we look to understand where you need to spend some money. So, if you think about a building as a concrete structure, in some instances you don't need to put anything on the concrete. It's the paint. It's the things that are going to take the cash on the way through. So we're very much around capturing information that's useful, and it feels that these capital works funds in New South Wales are sort of moving, and I think are going to get more, more embedded in data, just because the occupants, the committee members, whether they're getting younger or more tech savvy, I'm not too sure, but it seems to be the case across the board with other clients, is that there's a need to have a good understanding of what you've got as based as a data, not this PDF report, because people need to be able to work with it and function. So what we do is we essentially build an asset register for the building. The asset register includes everything that should be taken into account as part of what the committee is responsible for, and then we condition rate that, which then gives it a remaining life, and then we give it a cost to replace based on what we think the market is going to charge you. Although that's changing quite a lot, as you know.
Exactly.
So, yeah, it's quite detailed. We take photographs and we try and give it in an output that you can use and manipulate and all them kinds of things.
I agree with you from a data point of view. I think moving forward, I think a lot of people don't understand, if they haven't never managed a building or done regular maintenance around a property, that it actually is like a living entity, isn't it? Because it has a beginning, a middle and an end for everything that comprises in the building. And as some of our buildings are getting older now, that they do need that little bit more love and care, and the understanding of what that takes to manage the building, I think from a data point of view would be exceptionally helpful for committees and photos. I'm a big fan of photos. You've got historical data going forward, or you can look back to see where the issues are. So yeah, I'm really pleased to give it.
Look, there's different systems out there for doing different things, and people want different outputs and all that sort of stuff. But I think one of the critical things, and you're no doubt over this because we've spoke about this, is the legislation around these capital works funds, because it changed at 1819, and the responsibility with the committee is now to do these capital works funds every 5 years. We're getting to year 5 pretty quick, and the aim of that, I believe, and you may have a thought on this as well, is to make sure that the levy that people are paying is fair and reasonable. So if that lift's failed, or that roof's gone, or that swimming pool, whatever, it should have been made an allowance for because of its life over time. So the aim is to put enough in there so that when you get to that point in time, there's enough in the funds to do it. And people, this buyer beware piece that we've touched on as well, which no doubt we'll talk to, is it's not just buyer unseen anymore. You can get pulled over the coals on things. So I think when at some point in the future, when one of these committees gets pulled over the coals because they've not made an allowance for that roof that they should have thought about 10 years ago, and because it is 35, 50 years old or whatever, and somebody's coming to you and going, we need hundreds of thousands of dollars to deal with this, it should have been in the data. And I think that's when the shift will come from that PDF report that got done last week or last year, the same repeat, to getting the good quality information, which includes lots of different things.
I don't think a lot of committees are really aware, or owners, that all committees have and strata managers have a duty of care to repair and replace regardless of cost. So I know a lot of decisions can be made around the cost of doing something, but in saying that, that thought bubble needs to be put to one side, because you do have a duty of care to make sure that what needs to be fixed is fixed. And even if it's voted down at an AGM, you can go to tribunal and get an overruling order for compliance factors, and all owners need to comply. There's been a little bit of that. There's also changes that are coming through fair trading that have to be implemented by the end of the year. Is every strata manager needs to register who is on the committee as a contact point. This is some new compliance legislation that they've brought in for the real estate industry. That's for just strata plans. That's the major one that's happening. And so I think where what you're saying is, as far as, strata committees have an obligation and will probably in the future suffer harsh penalties by not acting on building works, is going to be quite high. So I think from a data point of view, annually, and I don't think, look, from a buyer's agent point of view either, I mean, it's not easy to obtain this information, to scrutinise a building on top of a purchase for a client. You either have to go in and do a search yourself, or you have to pay a lot of money to somebody to do it for you. And I would like to see that the Capital Works Fund is actually part of the AGM minutes annually, and so the owners can actually then assess the budget better, instead of just relying purely on the committee stating whatever they want to do in writing.
Yeah, and look, I guess that change is coming, hopefully, but the thing that we've seen more recently, and I say that in the last 6 months really, is talking with a couple of committees, and you end up now, we're talking with people who want to know the detail.
Yeah.
So they're going, well, why have we got it down at that? And, and in some ways that pushes us around, because they'll go, well, we made up, I can get that for $15 when you put 10 or whatever, So there's that. But what that also means is that they're actually looking at it and going, actually, what are we thinking here? We haven't done anything about the balustrades, or we haven't done anything about the roof, or whatever it might be. So there is a bigger interest. I didn't realise it wasn't a part of the AGM package, which is quite interesting.
No, it's not. It doesn't have to be provided. No.
Yeah.
No. I mean, owners can request it, and then it must be provided, but it's not part of just a must-have in the papers. But I think,
So it sounds like it's becoming more enforceable then, which is what the whole aim of the legislative change was, is to protect. I mean, at the end of the day, how many people live in units? And millions, and it should be legislated and regulated, and it should be somebody's responsibility,
I totally agree. See, the falling values in units are usually around the Capital Works Fund, and the levies. So if I've seen a lot of apartments that come up for sale, you sort of go, God, that's cheap for that area. Why is that so cheap? So it puts a flag in my head, go looking. So what usually is the first point of call is, oh my God, the levies are $4,000 a quarter. Who can afford that?
Right.
And it's usually because they have not done the works in the building, and they need, and the admin fund and the Capital Works Fund has got little or no money in it. So the strata plan is technically broke, which you're not allowed to do. You're not allowed to run a strata plan in deficit. It's against the law. But it's not overly enforceable, because you're not actually submitting accounts to a regulatory body, it's only goes to the strata manager. So, yeah, so there's all these little layers that pack into a building and living under strata. But I think from where you're coming from is great with your assets register, providing the data, and it's a moving timeline for committees, and you can work intimately with them, and then probably do a better assessment at the end of the 5-year period to say, okay, well, those works haven't been done. What happened? Was there something else that popped up that took all the money, or you just didn't just do it?
Well, this is the thing, isn't it? And, you're always aiming at a year as well with these things. So you go, I think it's year 7 and it could be year 5 or something happens.
So with your application, how do you provide that to a client? Is it a report-based document?
No, it comes out in an Excel spreadsheet. So we can give access to the system that we use, but in all honesty, it's probably not giving the reporting that we provide off the end of it. So that'll come now. There's different apps out there and cloud-based products, but at the minute, people are quite happy to get it in an Excel document and go, right, we can manipulate this, we can do what we want with it.
Yeah.
It's getting to be that, I guess, that we do this with, I guess, what you call them, commercial owners. We try and work with them more closely about what's coming up and what do you need to think about. And that comes back to leases and things like that. You mentioned earlier about if somebody's doing an update of one of the units within a block, they might do some of the changes that you think you need for life cycle on the way as part of a fit out.
Yeah.
Them kinds of conversations are really useful because you can start shaping it a bit more. But often what happens is or in the past, I think people have got it. We've done that, set the levy, leave it for 5 years, move on.
Yeah.
But it's got to be, I think it's got to become part of what you do in a collaborative piece of work that.
Exactly. Well, I just think the owners need to have skin in the game as well. Like I was part of a training committee last week, and I was quite surprised that a lot of strata plans don't charge the owners a renovating bond. So in one of the strata plans that I'm involved with, we have to pay a renovating bond to the owners corporation. It's usually 10% of the renovating cost, and that's just in case. And so we did have a situation where a builder went in unskilled, hit a pipe, flooded somebody's unit, took 18 months to rectify the problem. But at least we had the money from them to go fix the problem as quick as we could, because no one was dipping their hand into their pocket, because we had 10 grand to put towards the problem to stop the water and basically get plumbers in to fix it as best they could short term. But a lot of places just take it for granted, I think, that everything's going to go all right during a renovation or a maintenance. Great, no.
And look, we could get into the skill shortages and the quality of that as well, but I don't think we want to go there. It's a whole different conversation, isn't it?
Yeah, supply chain issues, inflation, all of that. Yeah,
cost to do everything.
Cost to do everything. Yeah.
Where do you start? Where do you stop?
Exactly.
It's a big subject, isn't it?
Yeah, exactly. Anyway, thanks, Craig. Thanks for today.
Lovely to see you.
Yeah, lovely. Thank you.
Bye-bye.